What's up everybody, Nate here, and the housing market craziness of 2022 just got a whole lot crazier. Last year in 2021, things were pretty great for the housing market. Buyers were able to get into houses at a relatively cheap level and they could save a whole lot of money because interest rates were low. However, in 2022, things are starting to flip. In June of this year, buyers have started to cancel their mortgages at their highest rate since 2020. Not only that, but inventory in the housing market is starting to rise as demand is slowly falling all throughout the country. So today I want to talk about some really interesting things that are going on in the housing market and everything that you need to know if you are a prospective buyer or are just looking to sell in 2022. So let's go ahead and jump into the numbers. According to Redfin, 15% of all homes that were on contract to sell in June 2022 were actually canceled by the home buyers. That is the highest rate of home cancellation contracts that we have seen since the start of the pandemic, where it was at around 11%. Not only that, but home builders are starting to see those cancellations as well. People who are looking to create new homes in the US are starting to cancel those contracts. So what exactly is going on here? Well, like I said at the beginning of this video, the housing market has been riding high over the last 2 years. At the start of the pandemic, a lot of crazy things happened with the finances of the United States, and all of that eventually trickled down into the housing market. For one, the United States Federal Reserve ended up printing trillions of dollars in stimulus with the help of the United States federal government to stimulate the economy. Because a lot of people were out of work, they wanted Americans to go out and spend. That eventually helped them to also lower their benchmark interest rates to 0%. So banks and other financial institutions were going to have a much easier time getting their money, and in that light, they made it a lot easier for Americans to borrow money from them. Interest rates for mortgages and auto loans and other things eventually went so low that it was much easier for Americans to get a home and to buy a car. They were saving hundreds of dollars every single month, so it was pretty much a steal. That meant that millions of Americans were now going out and getting homes. This was literally a record. We have so many people now going out and buying homes that we just didn't have enough homes on the market. That kind of trickled down into everything else, so home builders couldn't build homes fast enough, and there was just a lack of supply, which ultimately pushed up the price of homes because demand was super crazy high. Meanwhile, inventory was in the basement. Okay, that's a bad pun, but you get the point. This single-handedly meant the housing market was super hot. There were so many people going after homes that prices kept spiraling out of control. Some people saw their home values, whether they sold or not, go up by 15 to 20 and even 30% from 2020 through 2021. Now we are in 2022 though, and inflation, if you haven't noticed, is at an over 40-year high, making it really difficult for Americans to go out and buy things. And that has had a huge impact on the housing market as well, because many Americans are now having a really hard time affording a home. All of that is completely designed by the Federal Reserve though. They want to eliminate a lot of that demand out of the housing market and pretty much every market for that matter, so that way less money is circulating throughout the economy. If less money is circulating, well, then you're going to have lower inflation overall because none of that money has anywhere to go. But because inflation continues to rise in the United States, it was at 8.6% in May of 2022. That means the Federal Reserve has to continue to get aggressive with their interest rates and their monetary policies. At the moment, they have pretty much stopped all of their bond buying and asset purchasing on Wall Street. So they're not really stimulating the economy by printing a whole lot more money, and same with the federal government. We don't see a lot of stimulus packages at this point in 2022. The other thing that the Federal Reserve can do to eliminate some of that demand and hopefully bring down inflation is raise their benchmark interest rates. They lowered them in 2020, kept them low for around 2 years, and now they're starting to raise them once again. So far, the Federal Reserve has raised its interest rates 3 times in 2022. They raised them by 0.25% in March of this year, then again in May by 0.5 basis points, and again at 75 basis points, which is the highest basis point hike we have seen since around 1994. So the Federal Reserve is getting super aggressive on inflation, and that has a lot to do with why the housing market is cooling off right now. Interest rates in 2020 and in 2021 were very low. I know this firsthand because I actually bought a house just before the official pandemic started back in 2020. My interest rate for my home was around 2.75% at the time, and I actually know people who were getting in even lower. Some of my friends got an interest rate at just around 2%. Now, they are probably never going to see an interest rate that low again, but what about people in 2022? What do interest rates look like right now? Well, unfortunately, they have doubled. Right now in the United States, the average 30-year fixed interest rate for a mortgage is around 5 to 6%. That means that home buyers are going to be spending an additional $100 to $200 and $300 every single month on their mortgage just for buying a house right now, just because inflation is really high and the Federal Reserve wants to kind of limit the amount of people that can spend money. Now, right off the bat, what that means is millions of Americans are immediately priced out of getting a home. They simply can't afford what the mortgage is going to cost them because banks are going to look at their debt to income ratio. If their debt to income ratio is way too high with that added mortgage, well, then they simply can't buy a home, meaning they have to go lower in price so they can actually afford a mortgage. But that is the big problem. All of the home prices right now in the United States are overinflated because they've gone up in value so high over the last 2 years. Well, it's really hard for even any American to find an affordable home in 2022. So they simply can't afford a home. And this cancellations that we've been seeing is something that's relatively new since around April of this year. They have started to go up from around 6% in April up to 9% and now to 15%. All of this mirrors pretty much exactly to what the Federal Reserve has done with their monetary policy. And according to Redfin, one of the reasons why this is happening right now and didn't happen over the last 2 years is because now buyers feel like they have a lot more power in the market. They feel like because the housing market is starting to cool off and interest rates are getting higher, that they have more say in the home that they're actually going to buy. Something that has basically been paused across the board for the last 2 years was home inspections. Basically, when you buy a house, it is a really good idea to get it inspected. In some states, you absolutely have to, like it's the law. So when you get your home inspected, the inspector is going to look at all of the nooks and crannies and figure out if the home has any major problems behind the walls that you can't really see during your initial tour. If they find any major problems like water damage or there's electrical issues, then you could potentially go to the home sellers and ask them to reduce the price because you need to fix up the home to get it to where you need it to be. Obviously, the sellers can refuse, but in 2022, the home buyers are doing the refusing. They are now going to the sellers and saying, we don't want this house. We're going to wait for another house because one, your house is overvalued, and two, we have this contingency that if there were any problems, we do not want it. Like I said, that was paused over the last 2 years because home sellers had all of the power. Per every one home, there was 100 to 200 people looking to buy that one property. Now there is a lot less. So if sellers want to get their home sold, they kind of have to give in to what the buyer wants. Now, to be completely clear, we are still in a seller's market in the United States. So there are not a lot of homes available for sale, but the demand is still really high. So if a buyer wants that home, well, then they kind of still have to go off of the seller's demand. That is starting to slowly begin to shift as more homes are brought on the market. And over the past few months, demand has slid because of rising interest rates and rising housing prices. This is all in an effort to kind of reset the entire housing market and bring everything back into equilibrium. So you have a very close tie between what demand is and what inventory is. Another really interesting thing that's happening right now is buyers are having a lot of remorse about the house that they selected to buy. Basically, they're getting into a contract on a home, but they're kind of looking at the economic conditions that could be coming in the United States, and they're deciding that they want to get out. Obviously, inflation is going up in the United States, meaning the prices of everyday goods and services is rising. And when you have that coupled with potential unemployment crises and a recession around the corner, well, that could potentially mean that Americans are going to be making a whole lot less money. And if their job doesn't pay them more, then where are they going to get this money from? Now, when somebody gets on contract for a home, more often than not, they're going to get a fixed mortgage. Sometimes they can get an adjustable rate mortgage, which means depending on what is happening happening with the market and the Federal Reserve, your interest rate could go down or it could go way up. Right now, though, if you get a fixed mortgage, the interest rate that you get on your mortgage is going to be the exact same throughout the lifetime of your loan. So that could be 15 years or 30 years. That's awesome, but unfortunately, that is not the only costs that go into your home. You also have property taxes, and as property values go up in the United States, individuals who have a mortgage are gonna have to pay a whole lot more every single year in taxes. This could be $50 more, it could be $100, it could be $500. It really just depends on your particular area and your particular state laws. In addition, as your house becomes a lot more valuable because demand continues to go up, well, then you have higher insurance. You now have to pay a whole lot more in your insurance because you're insuring a more valuable home. You could end up paying an extra $500 to $1,000 in insurance as well. And then again, a lot of millennials and Gen Z who haven't had a massive housing payment before are now thinking about buying a home, but this might be a really bad time to do so because a recession is around the corner. Things are going to go up in price and people could lose their jobs sometime soon. If you buy a house, well, the bank doesn't really care if you lost your job. The bank doesn't care about an economic recession. They want you to pay your mortgage, so it's up to you to figure out how to do that. So that's where the buyer's remorse is coming in. People are looking at the home that they wanted to buy and thinking, I might not be able to afford this, so I am canceling the contract. And that's not completely crazy to think about because according to Redfin, in the second quarter of the United States, it took an individual 31% of their entire salary or wages to be able to afford their home on average in the United States. Normally, your debt to income ratio for the bank needs to be below or at 28%. So if all of your debts and other obligations go over 28% and you add on that mortgage, then you simply can't afford that home. That's what most mortgages go off of, and that's what most banks use. However, they don't really keep an eye on you after the first year or the second or 5 or 10 years in. If you consistently add debt onto your income and you go over and over, well, then they don't really care. That is on you. And right now, Americans are getting further along in debt and their housing payments are getting more expensive. Oh, and to add insult to injury, this is the highest that Americans have spent on their housing payment since 2007. Now, I wonder what happened in 2007. And finally, the other thing that's going on in the housing market right now is a lot of Americans are worried about their homes becoming a lot less valuable in 2023 and beyond. If the United States goes into a recession, if we start to see people losing their jobs and incomes don't really go up, well, that automatically means that housing prices are going to depreciate. Home buyers are afraid the home that they're going to buy is going to be a lot less valuable, and they have no interest in buying something right now that is supposedly an investment if it's only going to lose them money. They'd rather save their money and spend it on something else. Now, what this is all doing to the housing market is causing that equilibrium that I talked about before. So this is allowing more inventory to come on the market because demand is coming down and buyers are taking a lot longer to buy a house because they have a lot more negotiating power. There's a lot fewer of them in the market, and like I said, there's more houses on the market as well. So if they don't like a particular home or a deal or a price or the sellers, then they can simply just go to another property. It also means that we're probably going to see a lot less homes sold in 2022. That's going to hit the mortgage companies, that's going to hit your banks. So there is going to be a lot less money in the housing market, and with demand coming down, housing values most likely won't continue to rise as fast as they did in 2020 and in 2021. In my opinion, they are still going to go up because you're always going to have more demand in the housing market than there are homes. That is the American dream, and everyone in the United States wants a home. So they're going to go up, but they're going to be very modest, or they might not go up at all and they'll stay at zero, but I don't think they're going to go negative to what we saw over the last 2 years. That is a slowdown, and anybody that currently owns a house is going to have to deal with all of those additional things. If things go bad in the United States and the recession goes sideways, well, then many Americans are going to have to sell their home, adding to the inventory. They might not enter the market again because they can't afford a home right now. They're trying to get that quick liquidity, and they know demand is still pretty high. And there's that FOMO. Sellers believe that if they don't sell their home right now, this is the best deal they're going to get because over the next 2 years, we could potentially see an economic downturn. That all adds to the home inventory side as well. Now, there's a little bit of that FOMO on the buyer side too. They believe that if they don't buy a house right now, then this is the best deal they're going to see in 2 years as well. But the fact of the matter is, with interest rates going up, many Americans are just priced out of the market, automatically disqualifying them, which means they can't buy a home in the first place. It's not a matter of what they want to do, it's a matter of what they can do. Home building is also going to slow down across the board. There just isn't enough space, and there isn't enough demand for it too, because it's very expensive to build a home right now. By some estimates, building a brand new home could cost a home builder an extra $20,000 to $30,000 just because of the price of lumber and other materials, and all of that money gets trickled down to the potential buyer. They can't afford that either, so all of this is pointing to a housing market slowdown for the rest of 2022 and beyond. Obviously, economic conditions could improve throughout the United States, but what it's looking like right now is that this housing market boom is officially over. But now I want to hear from you on this issue. What do you think about the housing market in 2022? Do you think the housing market bubble has finally burst and we are finally going to see a cool down for the rest of this year? Or do you think this is just a slowdown? Do you think that the housing market is going to boom by the end of this year and into 2023? And then we are going to see housing values continue to skyrocket for the foreseeable future. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.